In this fragmented world, a lot of investors has been impacted by the negative news, including tariff, interest rate, geopolitical tension. But what we recommend clients to focusing more on the interest rate that impacted the US dollar depreciation. So today, I'm going to give you three recommendations. One is if you are focusing on the interest rate environment is going to trend lower that will impact the US dollar, what are the investment opportunities? If that is the case, what kind of theme that we should be focusing? Thirdly, what kind of a product that Pictet can offer to you? First, when we look at the history in 2019 to 2020, US Federal Reserve also lowered the interest rate environment, which was positively impacted, meaning that the US stock market, European stock market, Asian stock market, or even bond market has posted a positive upside. In the same time, the US dollar depreciated roughly around 11%, meaning that when the US started to lower the interest rate, the US dollar will depreciate. When the US dollar depreciates, the money will flow into the capital market, which is positively impact on a global basis. So that is the leading indicator that you should look for. Secondly, if that is the case, what kind of a market that we should be looking for? Mainly, first theme is the de-dollarization. If the de-dollarization means come because of a tariff, because of the decentralization of the central bank, which means that there will be an investment outside of the US that will be starting to impact, meaning that the money will flow from US into the emerging market, into the other part of the developed market. Secondly, if that happens, the dollar will depreciate, the money will flow into the other kind of a currency. If the investor is starting to accumulate more of the non-US dollar, then they're going to start for looking for investment. So we believe the Europe, Asia, and the other part of the Latin America should be benefiting from the de-dollarization. Secondly is on the deglobalization. Because of the tariff, which is already behind us, a lot of countries will be building their manufacturing, moving their whole industry, and also boosting up their domestic economy. So the deglobalization actually is benefiting on the domestic consumption and the domestic infrastructure. Lastly but not least is about the reshoring. Because of this impact, we do find globally, like in US, moving the infrastructure and manufacturing back to US, and in Europe, they are building their own defense system, and in Asia, they are building their regional ecosystem to benefit on that. So on that front, so we do find that de-dollarization, deglobalization, and reshoring will benefit on the energy infrastructure, on the technology broadening out, and also on the theme-based approach into the Asia and European market. So for us, we do think that the B-Ops is one of the opportunities that you can find. One, because they are the fund identified the future growth of the industry. We are not buying the winner nowadays. We are looking for the next winner with the focused portfolio. Second is if you believe the reshoring, infrastructure, energy are starting to make a positive impact, then the B-SIP will be the one that will benefit on the energy infrastructure to provide a sustainable energy. Lastly, we do think the lagger is more the B premium because the consumer has been negatively impacted by the rising interest rate environment over the last 2 years and the tariff impact. But now all these two are behind us, and then we have already seen the positive upside of the earnings, and the stock momentum is coming back to the B premium. So in conclusion, if we believe the global market is starting to have a positive impact by the lower rate and also the lower dollar environment, then going after for the B-Op, finding the next winner within the industry of health, AI, consumer, and energy. Second, if you believe the reshoring is one of the themes, then going for the B-SIP because they are focusing on the energy infrastructure, in particular for the water, waste, and also the other part of energy that will benefit on the reshoring. Last but not least is we do believe the lagging industry is definitely the consumer. With the interest rate is behind us and also the consumer is starting to benefit from this lower interest rate environment than the B premium. Thank you for your attention. Now is the time to go into the fragmented world with B-SIP, B-Op, and B premium.